Hi guys, what's good? I hope every single one of you is having a beautiful day going on so far. Guys, I always like to actually keep you updated with the current times and market conditions. So I'll definitely show you the current times and date from where I'm recording the session. So the current time is 48 minutes past 6 p.m. The day is actually Thursday and the date is the 11th of February 2021, as you can see here at the bottom, right? So the point here, guys, is I just want to actually elaborate further on what they mean when they say less is more on the market, right? Because for as much as you can see, all these successful traders all over the world, it can be in Dubai, it can be in the UK, it can be in the USA, it can be in Miami, it can be all over the world, it can be even in Nigeria, or even be in South Africa. Many of them, you see them and you admire them for the lifestyles that they live. But the lifestyle that they live, it don't include and it don't involve a lot of trading on a daily basis. But then the problem is all these 90% of traders who lose 90% of their equity or their investment within 90 days of trading, these are the people who are looking for trading opportunities every single day. Not every single day, guys, again, for a huge precaution. Not every single day is the best trading day. There are days that are best for trading, and then there are days that are not meant for trading at all. And mainly the only days that are actually meant for trading are the days that are actually worth the risk. You don't want to be involved in a market that is not worth the risk. That's one thing you should be well aware of, and I'm definitely going to be elaborating that by showing you exactly what I mean about that by going through the charts, right? Because some of you, I know, I've seen a lot of people have actually linked their accounts with us, and then for this week alone, they've actually been, some of them, because I haven't took any trades, like there hasn't been any trades this week, but that doesn't mean my life has stopped. That's the problem, right? My life hasn't stopped even though I didn't take any trades at all. So the majority of you come into trading, you work so hard, you slave for your money, you get your money where you get it, and then you put it into your account, you invest it there, and then immediately once it's there, you lack the patience and the necessary mindset to actually grow that account, and you just blow it. Why? Because you want to trade all the time, and if you're not trading, you feel like your life has stopped or whatsoever the case it may be, which is not the truth. It's just a false mindset. You are actually in desperation. And I always say this code: never go too high in elevation and never go too low in desperation. Because the point is, if you make money in trading and then you go too high in elevation, you start to see all those progress, you start to see all that money piling up. Eventually it can go to your head, and if you go too high in elevation, you're gonna end up over trading, and over trading can lead to blowing of big amounts. I'm speaking millions of dollars, right? And if you go too low in desperation, you eventually just end up chasing trades that are not worth it. Same applies in matters of relationship. You can wait for 2 or 4 or even 10 years to just get the perfect relationship that will give you a perfect marriage, a perfect union for the rest of your life, right? That's the consistency that you need. But some of you wouldn't have the fortitude. You wouldn't even have the capability to just wait a year or 2 years just to get someone you love so that you can go for a long period of time with them, enjoying that relationship. You rather just chase whatever is out there just so that you can have it for the moment. Instantaneous gratification. That's a wrong mindset, guys. Because the point here is this. Look, if you look at the chart that I'm having a look at, is the S&P 500 on a daily time frame, right? Daily means this is like the biggest structure. And since all the time frames gives us the perspective, I want to repeat it. The point or the use of time frames on chart analysis is for them to give us the perspective on the market, right? So this perspective comes in like looking at the behavior of the market within candlesticks and everything. And the main point is also candlesticks help us a lot, especially on the bigger time frames, such as your let me show you what the bigger time frames for me means, right? Between monthly, weekly, and the daily, that's where the bigger time frames for me are, right? This is where, if you're looking for swing position or swing direction on the market, long-term direction of the market, you'll only find long-term direction on the market from the daily, from the weekly, and from the monthly. Now, intraday moves or scalping positions could best be found in the hourly moves, right? Where you can actually look at your 4-hour, your 3-hour, your 2-hour, and even your 1 hour. And the minutes time frames, this is where mostly the entries are coming from, because these are where the smallest developments that are taking place on the bigger time frame. Look, take note of this. Our methods of analysis is what you call top-down analysis. It means we always start with the monthly to look for what? Areas of support and resistance. We don't worry much about the trend. Once we get to the daily, to the weekly, we look for direction of the market. So for as much as we are able to get support and resistance from the monthly, we go down to the weekly, right, to look at what direction, where is the trend leading up to. And then even still within the weekly, we want to find the weekly support and resistance because that's where the market makers focus is at. And then on the daily, that's where we look for the trend now. So once we have found both the support and the resistance of the week and both the support and the resistance of the month, we go down to looking for the trend on the daily, right? So once you are actually being able to determine it, you go to 4 hour, 3 hour, 1, 2 hour and 1 hour to look for patterns. So if you are on an upward trend, let's say for instance on the daily, so is that upward trend close to the weekly support or is it close to the weekly resistance? Those kind of things tend to indicate. So if they were close to the monthly resistance or the weekly resistance, if you go to the 1 hour and then the 1 hour, the pattern says we are close to the resistance and the patterns are reversal in nature, could you see the indication? You see what I mean? It's a decline, right? So once you go to the minutes, that's where you look for the very same thing that you look for on the bigger structure, but on the smallest time frame, because that's where the minor developments are taking place in. So okay, let's go to the chart and let me elaborate on the reason why for the past 5 days or the past 4 days I haven't took any trade at all. The reason here is this: a daily time frame. On a daily time frame, one candlestick represent 1 day worth of momentum. So if this was like a monthly time frame, right? These are just the basics, but I want to actually elaborate more, right? So if this was actually a monthly time frame, right? If this chart was actually on a monthly, it means this candlestick from here up to here, it's a month worth of development. So from here to here, it's another month worth of development. And then from here to here, it's another month worth of development. From here to here, it's another month worth of development. Now, the time frame that you're looking at is actually the daily time frame. So now, this means this candlestick represents a day. This is like a 1 day, and then this is a 2 day, 3 day, 4 day, 5 day. So it means this is about a week, because the market, this is not a synthetic indices. This is a stock indices. The S&P 500 is not a synthetic indices that trades even over the weekend. It's a stock indices representing the 500 fortune companies in America. Hence why the S&P or the US 500, right? So once we have 1, 2, 3, 4, 5, it means from down this level of support up even above that range of resistance, our price has made it above the range of resistance, right? Because it's above the red line that I've plotted. And this red line is something that I've plotted based on the previous price action. I've looked at the behavior of price from here all the way up here, and then our current price is like it's above that range of resistance, right? So okay, cool. If this is 1, 2, 3, 4, 5, it means the previous week it has been a dominance of the bulls. The bulls have been dominating this market, right? And consecutively, we have seen like a huge dominance, because if it's a daily, that's a huge trend on the smallest time frame, just like in 1 day, 2nd day, 3rd day, 4th day, 5th day. So let's look at why have I not took any trade this week, right? The reason is this: Monday started here, because this is like Friday, Thursday, Wednesday, Tuesday, Monday from the previous week. Then the current week is this one. You see this candlestick. This is Monday, Tuesday, Wednesday, Thursday, and look at the time, and the current time is actually Thursday today. So far the market for this current week only, it has just been in this range, right? So far the market for this week only, it has just been in this range. Do you think if you are to compare how the past week has been performing, look at how the past week has been performing, 1, 2, 3, 4, 5, and then look at where the current week is at. Do you think this week where we at it's worth trading? It's not profitable, because if you look at how the past week has been, this is where profit is at. But this current week where we at, up until we break above or we break below, then it's not worth the risk, ladies and gentlemen. And this is the reason why I haven't took any trades on the copy trades. And some of you end up being on my DM, be like, oh, is my account successfully linked? What's happening? Why are you not taking trades? The market is not worth it this week, guys. Do you understand what I mean? Up until there's a breakout, because remember, we only have tomorrow, which is Friday. So if the candlestick of today, which is Thursday, doesn't break below or above, then this week is not meant for trading. And I mean, like, you can try whatever you do. The market could just spike all the way down to this level and still come back all the way up. So if you wanted to actually hold a little bit long, and even based on spreads on commission and everything, if you trade within this range, it's not worth it. It can spike all the way down here before you take your profit is back down to your level of entry. So you're gonna wait how many days? 1, 2, 3, 4. 4 days of accumulation, swaps and commissions, so you can pay the broker without you having to make anything. Do you guys understand? You always need to come into the market to calculate volume. The volume for this week on this market is not worth it. We can go to Nasdaq. I'll show you. It's the same. Because Nasdaq and the S&P 500 represent the same thing. So if Nasdaq and the S&P 500, where the majority of investors are focusing at, are not having enough volume, look, this is Nasdaq. This is like today, Wednesday, Tuesday, Monday. This has been a range. But if you look at like the previous week, Monday, Tuesday, Wednesday, Thursday, Friday, at least that was some dominance. That's like some big move. Because let me show you this. If we are to cover this range from here, from the previous week only, if you are to cover this range from the previous week only, and then based on top-down analysis, that's the reason why top-down analysis is important, because it shows you what happens on the bigger structure as it relates with what happens on the smaller structures. Now, while we're still here, let's actually put it on the yellow color, right? So it's on yellow. Let's take it to our 1 hour. Let's see what that move only on the daily, what does it mean on the 1 hour time frame. Let's see what that mean on the 1 hour time frame, because remember, that's just like, okay, that's a big trend for me, that's a big trend. If you were able to trade from last week and be able to snipe your buys here and exit exactly there, as based on the top down analysis and looking at what the daily is performing like, that's a big move for Nasdaq. Even with 0.01 from here all the way up there, all I see is about $2,000 into profit, because you held that trade almost for the entire week, right? Unlike having to try to trade on the market that is ranging for this week, as you see, guys. So up until there is any real development on the market, I'm never gonna trade, and I'm never gonna go very too deep into the trade and stuff like that. I could go to my live account and show you which trades I have. So this is actually, oh no, let's drag this one down. Can you see up here it says Ava Real? This is a real account, right? So everything is all moving. If you go to market watch, the market is moving. So it's a real account, the market is moving. So this is a sell, right? On what? On the S&P 500, which was just recently executed. I just took this sell not long ago because I'm still preempting to see if at least we can break outside of that range we've seen on my trading view. And if you take this up also, you'll see that like the server is there, everything is all live, everything is all moving. So I'm still preempting this position, and up until it pushes below this line of 3,907, then we definitely never gonna like trade irrationally. This is the only position I'm holding for this week, and up until it breaks below this line, then it means the market is not worth it, because with the volume we have seen, the market has been long ascending. It has been long going up for the S&P 500, for Nasdaq, and all forms of market. I'm speaking of gold as well, right? So where they are actually at the huge correction phase, right? Correction, you can call it consolidation depending on whichever resonates best for you, but they are actually at the correction phase, and we are actually still waiting for confirmations of whether they break to the upside or they break to the downside. And once that confirmation comes, it will actually give us an opportunity to get such a big move as this one, where we're going to be trending. Because remember, it's only the market is only profitable if you are aligned with the trend. But if you are against the trend, then you're never going to make any money at all. You need to be with the trend, where the trend is leading up to. And this is where we are, ladies and gentlemen, from the S&P 500. We're going to be dropping, right? I believe like today, that's why Thursday is the day where I started to preempt some of my moves. If we're gonna drop, currently from where we are, because you remember my position is already executed, we can drop down to 3,838 just to find aerodynamic support at these two moving averages, consolidate a little bit, and then maybe for Friday continue going up, continue going down. But if Friday or this week you don't go down, then the trend that you're looking for, because remember this trend, you see this trend that moved from all this low up to this range of resistance. This trend took a whole week. So to this week where we are at is taking the whole week of consolidation. And it means the next week, it can be the next week of just trending to the downside. This week is not a week of trending. The week we are in is the week of consolidation. And I'm surprised why people are panicking and why people are rushing me to trade the master account. They want me to blow those accounts. They don't want me to make money. Making money comes, if you go to Google and then just Google what like is the most well quoted, like the main popular quote that is actually being said by Warren Buffett, he says that the stock market is actually a device for transferring money from the impatient to the patient. And that's the reason why you see all these traders that you revere the most, that you're looking up to. They live in their lifestyle. They are at the beach. They're traveling all over the world. They don't rush the trades. That's the reason why they are able to live like that. They have the freedom. They don't chase the money. The money comes to them. And this is something you should adopt as well if you want to actually find longevity and consistency on the market. Never ever chase. Let it be attracted to you.